If we look at property prices, finally they're taking a breath. There's obviously a lot of speculation out there that property prices will fall off the cliff. I do not believe that will occur. I think what we are seeing is just a little bit of normalization. I think particularly in some places like Sydney, I think people were paying over the odds for properties, because they were desperate to buy. And hence you saw, the prices, they scoot up heaps, went up 10% year on year, but literally up till December of 21, the Australian property market in every capital city went up over 20%. And that's the first time we've ever had that happen all at the same time. We've had times where one city did 20 and everyone else did 5, 6, 7, 8, 9, 10, but never did they all do over 20. And you see the growth that some of them are still experiencing. Brisbane in particular, Adelaide, Canberra, these are the people that are selling up at high value Sydney prices and going off to those markets, buying twice as good a house for half the price and still having a lot more cash left over. And you see, Melbourne is, coming off a little bit and has grown a little bit slower. That's because it had, a little bit more, apartment market that, was not needed when all the students left. But even that's being sucked up a bit. And we're seeing a little bit of softening off in those markets, a couple of percent, but nothing compared to what the growth has been. And I don't think it's going to be long before that bottoms out, because the migrants coming back in, the confidence returning as interest rates stabilise, and the demand that people have for owner-occupied homes is going to push these back to modest growth. I don't think we're going to see the record growths that we had, but we'll be back at 2, 3s and 4s in no time at all. But you can see the long-term averages are still quite consistent. And that's why we never get excited on a 20% growth, because that's lucky. You obviously right place, right time, you're happy, but don't think that's ever going to be consistent, because you can see the 5-year average for Brisbane is 8. And that's after factoring in a big growth lately. Even with Sydney having such a great run over the last 5 odd years, the average growth over the last 5 years is still only 5%, 9 over 10, which is enormous, but 5 years only 5. So it's not as big as some people realize, but the fact of the matter is 5% growth on the price points in Sydney is still an enormous amount of quantitative return. So that's been pretty damn good. But I think Brisbane's going to do particularly well. I think Adelaide's doing really well because people are finding out it's a great place to live. I'm loving Perth for the value. It's crazily cheap. And the other places like Canberra, the retirement zones of Sunshine Coast, Gold Coast, Hobart doing particularly well because that also is a retirement option for particularly Sydney-siders. I think they're all going to do pretty well, but there's a lot of new money coming into Sydney. There's a lot of new wealth. I think the Sydney and Melbourne markets are going to do fantastically well. But as we've always said, in the livable property sector, junk is still junk. Be careful about that. And we saw that with Melbourne. We've been warning people for the last 5 or 10 years not to buy small apartments. We call them stops, small, tall, and overpriced. Now, they've gone down 20, 30, 40%. But that's not just because of COVID and the market. That's because they were probably overpriced and undesirable at the time. So you still have to make sure you get the nicest property you can afford in the best area that you like, and then enjoy it at whatever price you do, and then let time and reality do its thing, and you'll be fine. One of the reasons that I'm so confident and remain confident in the market is that the numbers never lie. And if you look at this again is unprecedented, area for Australia. The vacancy rate is below 3% everywhere except Melbourne. Now, Melbourne's vacancy rate is only high because they had a lot of exodus for students, etc. But, even that's coming down. It's come off 0.6 in the last quarter, and it's down 1.7 in the last year. So this is showing you that there's little in the pipeline. Now, that might be softened a little bit by the fact that there's so many houses that are almost finished and will hopefully soon finish. But we're still going to have struggle in that housing market for the next 6, 12 months to get those properties finished and delivered. So this tightness is going to remain. And even when that supply starts to come into the market, now that migration has restarted, as soon as one is finished, there's going to be 2 people wanting to live in it. So I think we're going to have a prolonged period of positive activity in the Australian property market because the supply is so tight. And even with the bold prediction of 1 million houses in 5 years, when you realize that that's how it's always been, then that's not going to have a material impact on the market in any case. But hopefully there will be cheaper options for people. They just may not want to be out in those areas where those cheaper options are. And it's going to be interesting to watch how choice comes into it. But overall, I think the property market is going to stay very, very safe and very, very strong in Australia because of supply and demand pressures. Strong demand, soft supply, still a long time to get approvals. Hopefully they get in there and make more land available, and then it'll take a bit of pressure off, but it's still hard to get the good stuff. And you can see as a result, look at the rent increases. Now, again, that's inflationary in itself, but a lot of people forget that in COVID, a lot of the rents went down or were subsidized or even written off. So this is a little bit of that COVID catch up that I was talking about with inflation, you know, and we're seeing that everywhere. But this is not landlords gouging. In many cases, we're seeing tenants say, I'll pay this, please give it to me. I'll pay more than you're asking. So this is not necessarily just someone being a horrible landlord and saying, you've got to pay more. But this is just the simple fact of the market that there is a huge amount of demand caused by the lack of supply, caused by the increase of owner occupation, and there's very little rental pool out there at the moment. So we'll be looking for a little bit of relief, but it could take a while to come.